Hey guys, it's Andy Coleman. I have a very special guest with me today, Tina Valiant. She is a best-selling author. Tina, so great to have you.
Hi, everybody. I have written a couple of books. I have another one that I'm finishing up now called Maneuvering in a Distressed Market.
Guys, we just did a 2-hour-long podcast and I wanted to chop it up into two different segments. So this is actually part two. This was really interesting. It was talking about how the market is about to crash and it being a distressed market right now. So I'm just going to let it roll from when we started talking about a distressed market. One of the things I also wanted to talk about, which is your upcoming book about the distressed market.
Well, so my background was working for attorneys in Florida for 10 years, building foreclosure defense departments, designing their systems, hiring their negotiators, designing their defenses, bringing in all their clients. Now we're in a situation where there's starting to be mile markers that are coming out that we are headed for a downturn in the market, and they're starting to come more rapidly. They've been kind of occurring over the last year. But now we're starting to see them start to rapid fire, especially in the West Coast. And usually what happens in the West Coast trickles over to the East Coast is what happens. Okay. So being in the business for so long, I've seen the upturn of the market. I've seen the downturn of the market. I was in the middle of the crash. That's when I was negotiating and saving thousands of families from the stress of being foreclosed on, whether they were keeping it or short selling it or doing a deed in lieu, or maybe even a second mortgage short payoff, which I did a lot of those. It didn't matter what it was. These people were in need. And so I had shifted my business at that time to help all those people and these 3 attorneys that I worked for over 10 years. Now I've written a book because it's coming about again. It's called Maneuvering in a Distressed Market. And I know there's a lot of you out there that don't want to believe that we are going to have a serious downturn of the market. We are. Do I believe it's going to be a 2007, 2008 crash? No, I believe we're going to crash and we're going to pop right back up really quickly. We're much more seasoned now how to deal with these types of things, right? The lenders learned a lot during that time. For instance, if you have an FHA loan and you're behind on your mortgage, FHA, as long as you have an income coming in, will modify your loan and extend your term to lower your payments to make it more affordable for you. That's an automatic program that FHA is doing right now. People don't know that. So that's very different than 2007, 2008. They weren't doing anything.
But you still think there's going to be an actual crash because, there's a lot of people out there that are saying, no, it's not going to crash. It's going to keep going up. I'm
going to keep it real with you guys.
Yeah.
Okay.
Yeah.
They're doing that because they don't want you to lose your momentum. You don't have to lose your momentum in a downturn market. Let me explain something to you. My agents that I worked with in that downturn market wish that we would go back because they made more money during that time than they ever have in this market. If you're set up properly, if you know how to talk to distressed homeowners, if you know how to market to them, if you know how to get them to actually return your phone call, there's money to be made and you're helping people along the way.
Because you think that, all right, so just talk me through, because obviously nobody has a crystal ball, but what do you think is going to happen, over the course of, we're almost in 2024. I mean, do you think,
going into an election
year, which typically the mortgage rates always go down a few months, before the election happens. So what do you talk us through the next year, in your mind? Because you've been there, you've been doing the 20 years, so you've seen everything. So talk us through how is this going to play out in your mind over the next year up until the election? What do you think is going to happen?
Well, let's talk about the mile markers that I'm looking at right now, like the indicators that are showing us that there could be some trouble on the horizon. And by the way, I'm not just shooting off the hip with this. One of my lenders here in Arizona told me that 3 of her agents came to her in the last 2 weeks and said, hey, I need to call Tina. I have a seller that's in pre-foreclosure. 3 of them in the last 2 weeks. Okay, so that's a good indicator that we're starting to see this. And this is in Phoenix. Okay. So it is happening out there. Here's what has happened. People bought at the height of the market. They did. We're not at the height of the market anymore. We're starting to see a trickle down. Everybody can agree in most markets, we are starting to see a trickle down. Okay.
I think we're at what, 2.5% lower?
Yeah. So think about it this way. Your cash buyers, your big cash buyers. BlackRock, Zillow pulled out of the game of buying homes. Redfin in trouble.
Fucked.
like, I don't know if you guys have looked at stock, but like Open Door, not doing so well. They're in the pennies right now. Okay. So when you start looking at these bigger cash buyers and they start pulling out of the market, that's one of your first indicators that they know what's coming. They're
Something's
starting to hold
coming.
on to inventory because they're not selling as much. They can't afford to do that. They're not offering more than what the market is showing right now for homes. They're actually trying to get rid of their homes right now as quick, fast, and in a hurry as possible. So that's one of the first indicators. Another big indicator is when we're in a frenzy in a buying market and there's not enough homes, builders start buying up tons of land. You all can say, like last year, the year before, all of a sudden there's new buildings popping up everywhere where the builders are building homes. They've got lotteries. They've got this. They even cut out agent commissions because, you know, they thought they didn't need us anymore. They're stupid because eventually they're going to need us again. And guess what? They're there right now.
They started giving us commissions again. Yeah.
Yes. So that's a second indicator. When the builders start giving us commissions again and even incentives to sell their product. Here's why. They built all of these homes. They had people that were on the hook. Maybe it took a year, maybe it took 6 months, whatever the case may be. Now those homes are going down in value a little bit. They're not appraising people. They're not appraising. So
Yes.
these people
You know what?
are having a problem. They're like, what do we do? Do we lose the money that we put down on it? Do we try to come out of pocket? Maybe they don't have the money to come out of pocket and their interest rates are higher. So now their DTI income ratio is all messed up. So they can't even close. So
could you give us a real world example of this? Sure. I don't want to forget this. So about the appraisals, because I just had something happen with the appraisal. So are you having, let me explain my situation, right? So had a house, it was $325,000. Okay. I ran the comps and it comped out for 325, right? This was maybe like a month and a half ago or so. Comped out, right? 325. Okay. So all of a sudden it got delayed a little bit. The appraisal got delayed a little bit, maybe like 3 weeks after I ran the comps, went under contract. We finally did the appraisal. And all of a sudden, 3 houses in that neighborhood closed for like 300,000, 295,000, 305,000, like way under the 325 that it comped out to before. So we're talking, 20 grand less that these 3 houses just closed for in the past 3 weeks, right? So then all of a sudden the appraiser comes in and says, no, your house is not worth 325K. That was 3 weeks ago. Your house would have been worth that much money, but today it's only worth $305,000. And we were like, holy shit, this just happened. Like, I just closed on the house a couple weeks ago. So just happened. And we had, like you just said, we had to pivot fast, like we had to negotiate with the seller. We had to negotiate with the buyer. Like it was a whole freaking ordeal because we had to, they had to come up with the money out of pocket. You know how that works. If the appraisal comes in lower, like the buyer has to come up with it. Okay, so I just had the one. So pick one of them. Tell us what happened.
All right. So we had one. It was our listing. Okay. Went under contract the first weekend. No problem there. Family really, really wanted the home. There was a couple of things they wanted on an inspection, nothing major, but definitely wanted a couple of things. They were wanting closing cost credit at first, but me knowing and watching the market, here's what I want to warn you guys of. If you have a choice between lowering the price or giving closing cost credit, lower the price instead, because here's what happened. And I told my clients that this could happen. When I list a property, I tell my sellers, I'm like, listen, I can tell you what the property is worth today. I can't tell you what it's going to be worth in 2 weeks. I can't tell you what it's going to be worth a month. I certainly can't tell you what it's going to be worth 6 months from now. I can tell you what it's worth today. I have no control over the appraisers, and appraisers are being seriously scrutinized right now from above. So I have no idea what they're going to come in at. I set that stage up front before we even go under contract because you don't know in this market. So lo and behold, the appraisal comes back 3 weeks later. There happened to be a home identical to our listing that closed a street over for $26,000 less. And that is the comp that the appraiser used. And there's no point in fighting it. It just closed. Okay. So I had to go back to everybody, first, I never negotiate against myself. So I went to the buyer's agent. I was like, what are your buyers willing to do? I'm not going to my sellers until I have an answer from them. Then I went to my seller and I'm like, okay, great news. There's good news. There's bad news. I'm going to tell you the bad news first, and then I'm going to tell you the good news because it's all about delivery. All right. The appraisal came in $26,000 less. Please don't panic. I've already been working with the buyer's agent. There was a home that closed a week and a half after we went under contract on your house, and it's identical to yours. And that's the one that the appraiser is using because it's identical in lot and everything. There's no way to refute this amount. So the buyers are willing to come out of pocket above appraisal $10,000. They're trying to meet you halfway, but they're maxed out at 10. And they were doing an FHA loan. So the fact that they had anything was amazing. Plus, it's an FHA loan, so it sticks with the property for another 6 months.
6 months.
Okay.
Yeah, geez.
So I had to explain that to my sellers too. And they were like, okay, we understand. You told us that this could happen. And so at least they're trying to meet us somewhere in the middle. We'll reduce the price $15,000.
And you did. And the sellers agreed, buyers agreed, and then you closed the deal, right?
But it's all about setting expectations up front. So then you got these new builders out there. Okay, let's go back to the new builders. So their people went under contract on that house a year ago. Okay. So a year ago, the interest rate was 4.5%. Now they're at like 7.5. So these borrowers go back in. It's time to have the appraisal. Now it's not even worth what they were buying it for, and they don't qualify.
So, because I know our interest rates right now, the mortgage rates are, I think we just reached a new high for the past like 23 years, right? Like yesterday or 2 days ago. I think we're at like the previous high of 23 years ago.
I have a buyer right now getting down payment assistance, FHA. Her rate is 8.05%. The woman has stellar credit. She just wants the free money.
Whoa.
8.05% with a cost of $9,000 for that rate.
Whoa. Do you think, because I remember back in like, I wasn't born obviously, but like the late 70s, early 80s, we were at like 16% for the mortgage rate. Do you think we're heading up back towards that, like, towards that level again?
I don't think we'll get that.
What do you think we're going to get? What do you think?
We might, before they start lowering it again, they're really trying to stop people from buying homes. That's really what they're trying to do. So they keep raising the rates, hoping that it'll stop down the buying and bring it down. But the reality is people are still needing to buy a home. Real estate gets sick, but it never dies. There are always going to be buyers and sellers. Bottom line. So there's still people out there.
The Fed rate. Yeah, the federal funds rate. That's what they're raising right now. And obviously there's no federal mortgage rate, but it has a direct correlation. So you think the Fed's going to keep just jacking that rate up, and then the mortgage rates are going to keep going higher and higher and higher until the election happens?
They will until the middle of next year. I really foresee them doing that. They're trying to slow down inflation is what they're trying to do. And I get it, but they're going about it the wrong way. And they waited too long to start this process. Okay, if they would have raised rates from 2.9% to, let's say, 3.5%, 4%, way before they did, like a year before they did, that would have helped to regulate things at that time. They waited too long.
We're in a tricky market. Yeah. So wait, so how are we going to recover from it? Because it's my understanding, you've been doing this way longer than me. Has this happened before where we have super high interest rates, very low inventory, and very high prices? Has this ever happened in your 22 years of real estate?
Well, yes, because during the crash, there was craziness happening. Right before the crash, there was craziness happening. Okay. Prices skyrocketed. Interest rates were higher, not as high as they are now, but they were higher. They started putting more stringent regulations on to try to slow everything down, which we're seeing, which is another mile marker of what we're seeing. I just heard somebody that needed a year's worth of reserves to close on their loan. Okay. Whoa. So the lenders are starting to tighten down on their requirements. They have to, which is going to negate some people from being able to purchase right now. They're trying to slow it down. They're trying to bring prices back down on homes. And quite frankly, between you and I, prices need to come down a little bit on homes. They really do.
I would say so.
Because the average American can't afford a home right now. And then because prices went outrageous, Investors were buying at higher prices, which means they jacked up rent. You're seeing it on the rental side. But now what's
Oh yeah.
happening is you're seeing people that can't afford the rent on some of those homes because they've got to buy gas, they've got to buy food, and those prices have gone up astronomically. So now what you have is a bunch of people starting to share homes. You have roommate situations. You have multi-generational families moving in together. And those are other mile markers that are telling me, okay, so there are going to be people coming up here that are not going to be able to pay their mortgage. 5 companies in Arizona last year in Phoenix laid off because consumers can't
Wow.
afford their products right now. Their house broke and their food and gas broke.
So you foresee the prices of houses like actually crashing, or do you think it's going to trickle like slowly just go down? Like what's
There's
your
going to be a rapid
thoughts?
movement for a minute as people start losing their jobs, which is starting to occur now. And
Oh,
people are going to be forced to sell their homes. Hopefully, they won't put their head in the sand. Hopefully, they will get help immediately so that they can at least pull the equity that they have in the home, the little bit that they have. Okay.
yeah.
But when we start getting to a point where there's more homes on the market because of this, because people have to sell, they can't afford the home they bought and spent their entire savings trying to outbid somebody else, because that's what happened. People were like,
Eesh,
oh yeah,
I
I'll
know.
pay $50,000 more than appraisal. So they take all
Yeah.
their savings out. So they used all their
Oof, it
savings. We
was
saw
rough
this
times.
right before the crash last time. The same thing happened where people were pulling all
Oh,
the equity out of this house to buy another house, and then pulling all the equity out of this house to buy another house with their stated income loans and all of that kind of stuff. Another indicator is that
yeah.
we have those loans out there again. We have stated income loans now. We have bank statement loans
Oh yeah.
now.
Yeah, I
We
know. Yeah.
okay, well,
Which
for
I just did one.
years we kept those away. Well,
But
now
then
they're getting desperate and they're bringing those back.
they're repeating the same mistakes again.
We're repeating the same mistakes again. So do I think that we're going to
Ooh.
like crash? Yes. I think we're going to have a
Yeah.
huge dip all at
Oh.
once as people start having to sell their homes, whether it's investors
And
because
that
people can't afford the rent, whatever the case may be. But then we're going to get through it much faster this time. It's not
okay.
going to stay
Okay.
there.
Well,
But we as agents are the first defense. We're the
yeah.
first line for these people that need help. We're the first line for them, right? We're the front
Of
line,
people that
and
need
we've got to
help.
get them to
Yeah.
the attorneys they need, and we've got to get them into a positive situation. We've got to get them back on track with their life. And without agents having those initial conversations, these people are in trouble when they start not being able to cover their bills, when the collections start coming. We're at an all-time high of credit debt in this country right now. That's another indicator. People are using their credit cards for food and gas because their mortgage payments are so high. And what about all the people that bought a 3-in-1 buy down or a 2-in-1, and now all of a sudden this year their interest rate's going to go up a little bit, and the next year their interest rate's going to go up again? That's when people start really getting hit. And we have to look at all of these things and we have to arm ourselves. So maneuvering in a distressed market is something that I wrote about a year ago. I'm fine tuning it right now. I'm editing it right now. I'm undecided if I'm going to publish it or if
Oh,
I'm just going to offer it as training in my Agent Accelerate group coaching platform.
it would seem like that's something you want to like kind of get out there now because we're just about to enter into this, right?
I know, but then me launching another book is like launching a whole other business again.
Oh, was it too much work?
Of a business.
Oh, so
You've
you're
got to do the
afraid.
promotion in the book. You got to get out and talk more about it. You got to it's promotion for me. And I already have the platform that I need for the people that want to take the training. I'm already known for this. So I can create the trainings. I can add them to the group coaching because they're going to need continued coaching on the marketing strategy, how to talk to the homeowners, what to do when they have a situation of a homeowner that's not the norm. They're going to need continued coaching on that. So for me to just put a book out there and then they not have somebody to ask questions to could be dangerous.
But you can't do both. Like maybe work an
I
extra,
can.
10 hours a week. You can't.
I can. I can. I
Oh,
just
you
haven't
could.
decided if I want to.
I think so. I think so because the book is going to help, a lot of people that, maybe buyers, sellers, landlords, like homeowners in general. I mean, whoever it is,
Right.
like the book's going to probably help a lot of people. And then you can also do the training on top of that to help the agents. So you're going to
Right.
be, me personally, I think, get that book finished and just get it out there fast. And then you're going to look like the hero because you just, if we do have a crash and everything happens like you're saying it's going to happen, you're going to look like the genius, like Nostradamus. You're going to look like you just predicted the future.
I know, I know. And then the other part of that too is I'm also going to create a group training platform for lenders and law offices that need negotiators to negotiate these loans because most people have forgotten how to negotiate at this point. It's been a long time now.
Because the rates are so high right now. You're saying people need help negotiating the terms of the loans.
Right. So here's how it works. Mortgage brokers are federally allowed to get paid for short sales, like on the closing statement, whatever. Okay. Attorneys are allowed to get paid for short sales. Nobody's allowed to get paid upfront for loan modifications. Don't ever, ever, ever let somebody try to charge you upfront for a loan modification. That is a federal offense, and companies are
Oh,
taken down for that all the time.
oh,
But people don't, like, lenders don't know how to negotiate, right? Law offices haven't had negotiators in a long time for this type of stuff. So there's a whole process that has to be put in place to be able to negotiate effectively, and what steps that is. I will put together a group training platform for that as well, for the companies and individuals that want to learn how to negotiate and are able to get
that's
paid.
a good
I do
idea.
not
Yeah.
recommend realtors negotiate their own short sales when it comes about. Don't do it. It's not your highest and best use of time, and you don't get paid extra money for it. So why do it?
So for agents, then, what do you think their highest and best use of time is going to be? Because now that you're saying that there's so many red flags and indicators coming up that the market's about to crash in the next like year or
Mhm.
so. You did say about a year or so, right?
Mhm. Yeah, I mean,
Okay, so
it's starting to hit
summer next
now. We're
year.
starting to see it
Yeah. So
now. By
okay,
next
and
year,
then
we'll
and
be in
then
full swing.
full swing. So you think maybe because this is just for me too. Anybody listening right now, because like I'm saving to buy houses. I
Oh,
actually
yeah.
agree with you. I think something's got to give. So I'm saving to buy houses right now. Like I
Yeah.
want to stack away cash, and then once this happens, I want to just start swooping up,
Very
grabbing as many
smart.
properties as I can. Is that
Very smart.
so?
I have pulled all
That's
of my investors out of buying right now because I do have investors that coach with me as well. I have investors that I'm like, listen, do not buy anything unless it is such a killer deal that you can't walk away from it. Okay. But be prepared to make it a rental if you have to. If you don't
yeah.
need
I
that
mean,
money
listen.
back out, you're not doing
Yeah,
a hard money loan and you can keep it as a
yeah.
buy and hold for a while, then know that that might be the end result by the time you're done.
Yeah, because if you want to, like, I agree because I think like if people are trying to buy homes to flip them right now, I don't think it's a great idea because obviously, maybe in 6 months from now or 9 months from now, you're going to have maybe, 5, 10%, a lower 5 or 10% price than what you bought the house at now if you bought it. So obviously we know,
Or
as
more.
realtors over or more, you think more than 5 or 10%?
Yeah, like, okay, so we had one
Oh,
investor on my team that literally bought a home that we told him not to buy. We're like, do not buy it in that market right now. Took him 4 months to do the renovations, get it all ready, get it back on the market. We finally had to take it off the market because he was going to lose $25,000, $30,000 selling this
yikes.
home. So he ended up renting it out.
Smart, smart. Because that's what I was about to say
He
before.
had to,
Obviously, as we know,
but he had to buy
you
his
have to
other
because,
partners out. He had to
yeah,
buy his
because
other
listen,
partners out. It
we
still
know.
cost him money.
Yeah, but eventually he will, eventually the
He
price of
will.
the home will go back up higher than what he paid. It's just going to take time.
Absolutely.
And that's the problem. So like, yeah, I mean, that's what I'm saying. Like if I
Oh, you cut out.
right now, I don't know if we lost the feed for a second. Okay, I think we're back. It's not a stupid idea to buy a house right now. It's not like the end of the world if you buy a house right now. You just have to wait for the market to rebound. So you can't, if you need the money right away and you're planning on selling it within the next like 6 months to a year, that might be a big mistake. So
Right.
holding it and renting it out, getting the equity in the home over the next, who knows how long. I mean, how
Right.
long do you think this crash is even going to last for? Like, do you think it's going to be a year, 2 years? Like on average, like how long does this typically go for before we see the prices go back up past the previous high?
It depends. It depends on politics. Unfortunately, politics is playing a huge role in this situation right now. We as the people don't have control over that right now. So the government is literally dictating how high pricing is going based on interest rates and everything else. They're dictating gas. They're dictating food costs because of gas. They're the ones pulling the strings right now to try to rein us in as a country and not spend as much money. Okay. So we have no
Yes.
control over that. I can't tell you that it's going to be 3 years before we recoup. It depends on the government and what strings they continue to pull. It really does at this point. And I hate to say that, and I've never said that in history before. The other thing that I wanted to point out to you is this. When I'm working with a buyer, I say to them, okay, are you looking to stay in this home another 3 years, 5 years, 10 years? What is your end goal? No, we want to stay in this home. Okay, that it's a sound investment. If somebody tells me they want to move in a year, I'm like, go rent. Go rent right now.
Yeah.
Don't buy right now because you may not get your money back out of it. We as agents have an obligation and a duty to educate our buyers. That builds trust, which keeps them clients for life. Don't be afraid to tell the ugly truth. It's
Exactly.
okay.
Like I had a client, I just did a $3.4 million home, and crazy enough too, this is also showing indicators too, for this particular house purchase. It was listed for like 4 million, maybe like 9 months ago, right? And then all of a sudden, market starts going down and everything, and they had to start reducing the price. So we ended up picking it up for, well, my buyer picked it up for 3.4 million, a $600,000 reduction from when they listed it, 9 months previous. And I told them, I'm like, listen, man, yes, you are getting a fantastic deal right now. It ended up appraising for over, which was pretty crazy to me, because I guess we
Yeah.
got that good of a deal. But I told him, I said, listen, dude, I'm like, the market might still go down. Now, yes, obviously you're saving 600 grand from the previous high, so that's like phenomenal. Like, I mean, dude, once the market goes back up again, you're gonna make a killing on this house. But
Right.
be prepared to hold this for a couple
Yes.
years,
Yes.
like you might, if you want to move, you can move, but get a renter and throw a renter in there for 20, 30 grand a month for the rent price. But you're gonna have to hold the property because we don't know what's gonna happen, and we're seeing all these indicators that it's not gonna be pretty. So I'm just very curious to see what will happen, how long this is gonna last for, because I know the government wants to try and fix this, because they with the whole
They don't
pandemic
want to
thing, they
fix this
started
right
giving
now.
away money. They don't want.
They don't want to
I
fix
don't
this
think they
right
want. Well. I think. Well. So let's talk about that because
now.
I think what they're trying to do by fixing it is raising the federal funds rate to get the interest rates higher, so we can start reducing the inventory. Or sorry, raising the inventory and reducing the price of homes. So wouldn't that be them trying to fix it?
They're trying to put a band-aid on the world that they created by lowering interest rates to 2.9%. Interest rates should have never been down that low. Banks could not sustain that forever. They created a buying frenzy. Now they are trying to band-aid it and try to bring interest
Why?
rates up to stop the process.
Why did they do that though? Years ago. Why?
Because through COVID, they were just trying to keep everybody stimulated. They were infusing money in money that doesn't even really exist, and they're like creating this whole buying frenzy for consumers. Like, okay, nobody can go anywhere, so let's buy a house, right? Or oh, now I get to work from home all the time, so let's buy somewhere else. And oh, sorry, now we have to go back to work, and now I live an hour away again. Like there was a lot of things that occurred through COVID that created, we're in the bubble effect from everything that happened with COVID, is what's really going on. Now
So
they're trying to
that's
fix what they
mm,
broke But there was better ways that they could have fixed what they broke.
What would you suggest? Like to fix things
Ugh,
now? Like what would you
man, we
suggest?
don't have enough time on this interview. We really don't.
Is it?
But it's just sitting on the outside. And then I also want to point out too that before the crash happened, back in 2007, 2008, there were all the people out there saying, we're not having a crash. We're not going to go into a cash. And you know who made all the money? The people that shorted all of that stock. That's the people that made all the money. Okay. Because they knew that it was coming and nobody was listening to them.
So the stock market is because in a crash like this, the stock market's also going to be affected as well.
The stock market has been affected. Think about it. All the mile markers are there. The stock market has been affected. The job market is now being affected. Guess what's going to happen? All these people that went and got these cushy jobs and now they're getting laid off, they're going to go out, they're going to go back to being servers, and we'll actually get service at restaurants again.
Because I'm looking at the stock market now. What I usually follow is the Vanguard Index Funds, VOO. It follows the S&P 500. I'm not like big into stocks. I've learned about them a little bit, but I'm just looking at it now, and it's down to 388, a share right now. And I know over the past month, it got up to $413, $415, which wasn't, the previous high, I think it was like 427 or 435 or something like that, right? So we almost peaked again in the stock market, maybe a couple weeks ago, a month or two ago. And then, I'm looking at it right now, and we are literally going down right now. Like we're down to 388 when the previous high was like 437 or something like that. So yeah, we are going down. So you think the stock market's also going to continue to go down, over the next year?
I know people that have like their retirement funds and all of that kind of stuff, and their retirement funds are dropping. They're having to shift what stocks they own. They're taking all of their stock out of real estate companies right now. I'm hearing that over and over and over again. I don't play with the stock market. I just know what people are telling me is happening. I have a very close family member that just lost 20 grand last week from their retirement funds and had to completely shift their portfolio because they were going to continue to lose more money. This is a constant, consistent thing. I work primarily in the retirement communities when I'm selling real estate, and our buyer pool of cash buyers has gotten much smaller because their retirement accounts are being hit in the stock market.
Shrinking.
So I can only tell you firsthand what I'm seeing in the field and the people that I'm talking to and how they're being affected. And these are the things that nobody really wants to talk about, right? Like they don't want to put like on the news and everything else, like mass chaos, frenzy, freak out, everybody's pulling out of the stock market, blah, 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 like they did back then. Okay, they're trying to do things to prevent what happened in 2007, but the problem is it's still happening anyway because they increased the cost of everything.
I know. Yeah, it's going to be interesting to see, over the next like year or so, how people are going to react to this and how fast we recover. Like how fast did we recover in the 2007-8 crash? How long did it take us to really recover from that?
Well, Florida took forever, and it was because you guys are a judicial state. Okay. In Arizona, we're a non-judicial state, which means that if you're behind on your mortgage 90 days, you're getting notice of your property going on auction. There's no lis pendens and complaint. Texas is the same way. Okay. Florida, people can hold up their mortgage for up to 5 years in court.
Whoa.
So, which doesn't help Florida bounce back faster.
Oh, we want those foreclosures, you're saying?
Yeah, like you want people to go ahead and short sale or get them on the market or whatever they want, because that will help you recover faster. The people that are like, no, I'm just going to hire an attorney and I'm going to sit in my home as long as I can and not make a mortgage payment, and then I'll eventually sell it. You guys have a lot of that in Florida.
So I see where you're going with this. You're saying
I know, because I represented those people.
Yeah. So our inventory here in Florida is going to still be on the lower side because of that aspect of the foreclosures, it being a lot harder to do the short sales and foreclosures. So you're saying our inventory is going to take a long time to really recover in Florida, as opposed to other states like Arizona or Texas,
where they flip right away. Like they're
where it's
on the
just
auction
boom.
block, people buy them, there's new people there, the neighborhoods don't deplete. There's not like weeds growing up all over the neighborhoods, vacant homes, nobody knows where anybody is. That doesn't happen in Arizona. So Arizona's economy popped back very quickly after the last crash.
Mm. And what do you think about just Florida in general right now? Because I have a lot of clients that have, bought houses, rented houses with me over the past few years, came here from New York or Massachusetts, and all of a
Mhm.
sudden now they're leaving. They're like, oh my God, the HOA rates are going up, the insurance rates are
The
going up right now.
insurance,
Like cost of
your guys'
everything is going up right
insurance
now.
is
Insurance,
crazy.
what
Yeah.
bananas over here. So like
Do you
we're
like
having a
that? I look
lot
like
of
a
people.
bandit. Do you see this? I look like a bandit
Yeah,
right now.
I see that now. Yeah, yeah, you look like you have a mask on,
No, you're
a
right
light mask.
though. You're right.
Yeah,
Your
it's
insurance is your insurance is supposed to get better over this next several months. There's more insurance carriers that are actually coming into Florida now. I have an amazing insurance rep. If you ever need a recommendation for one that knows
oh sure,
all of the stuff
yeah.
that's going on right now, he can even get your roofs covered if they even only have 3 years of life left. And
Oof.
he's got several carriers
That's
that he works with.
yeah, yeah, because that's a
So
big
we don't
thing
have those
why people
problems
are
in
leaving.
Arizona. We
You
don't
don't
have
have those
that.
problems. Yeah, I mean, yeah, the insurance got flipped upside down over here.
Yeah.
So I know like a lot of people. So do you think that's going to help our cause because people are moving out and not as many people are moving here to Florida as much anymore? Like what do you think? What role impact do you think that's going to play?
You still have a pretty big migration rate coming into the state, just like we do
We
in
do,
Arizona.
yeah. It's not as
Okay.
much as before. I think we had
Right.
950 people moving per day at the peak, and I honestly don't know the exact number now, but I know it's not as much as was before.
Yeah. Yeah. So, but you do still have migration coming into Florida. It'll lighten up a little bit. And then when January hits, you guys will have more people come in because obviously the snowbirds and
In season.
everybody else, they
Yeah.
want to get out of as soon as it
Oh,
starts
yeah, that's
snowing
coming
in other
soon.
states,
Yeah.
you guys
Oh,
will have
we're talking
migration.
yeah. We're talking October, November,
Yeah.
like
We
right
still
when
have
November
that
hits,
here
like we're
too.
gonna start. You have the seasonality as well.
Oh yeah. Oh yeah.
Yeah,
My
it's
busy season is January through the end of April and it's a
okay.
frenzy. I'll have like
Yeah.
60 couples come into an open house in one day. Like it becomes a frenzy. Yeah.
Yeah.
I
And
have to have
then
like two,
and
three
because
agents there to try to catch everybody.
yeah, I mean, it's interesting too because we're gonna have a crash, but I mean, because we were talking before in the very beginning, I want to circle this back around to agents leaving, you know what I mean? Because they can't get any
Mhm.
business done right now. So, like, what's your recommendations then? Like, we think a crash is coming, because I do agree with you on this. I don't agree with the people saying that the market's gonna keep going up. I think that's horseshit. So what advice now do you have for all these agents now that we know 90% of them are leaving the industry? Like, what's your advice now for them coming up over the next year? Because you said before that now is a good opportunity for agents to make a lot of money. So
It is.
what's your advice for agents coming up? Like
It
what are
is.
you telling a new agent right now coming up?
I tell them, first of all, you need to get proper training on the processes, right? Like you need to have a roadmap for success, no matter what the market is going to do. And that's where agents are falling short. Agents traditionally don't want to pay to better their career. It actually is really, really funny to me. I charge $97.50 a month for the subscription for the group coaching. That's unheard of. And I still have
It's
agents
nothing.
that are like, oh no, 97.50. What if I don't like it? There's no contract. So quit if you don't like it. But you have nothing to lose. You have everything to gain, right? So agents need to get educated. They need to go ahead and get their certifications, whether in whatever their niche is. They need to hire coaches like you and I, whether it's group coaching, whether it's individual coaching, so that they know how to market themselves. They know how to get themselves out there. They know how to talk to clients. They know how to help people figure out their end game. And they're not wasting their time with people that aren't ever going to pull the trigger, because so many agents right now are so desperate for business that they're meeting this person who's dragging them out to 30 homes, never pulling the trigger on anything, and they're getting burnout and frustrated. Well, it's because you didn't set the expectation up front. You haven't been trained how to build that urgency, how to show 5 homes and write an offer. They're
Yeah.
lacking the training. They're lacking training.
Yeah. That whole, desperation attempt where you're just doing whatever the hell the buyer or even seller
Giving up their whole
says, you know what I mean?
commission.
Like the giving, yeah. I just had an agent had to give up their commission because of something similar like that. And I had a buyer's agent that I was talking to the other day that did show like 15 homes. I said, what are you talking about right now? I'm like, after the first like 1 or 2 homes that you show, you should first of all be able to instantly tell what that buyer is going to want. You know what I mean? Like just from there, feeling them out, like going to the showings with them, like you should not show them a property that they won't like. But they asked me, they're like, well, they wanted to see the property and they told me they wanted to see the property. I said, well, did you tell them that they're not going to like the property because of X, Y, and Z, because you already took them at 2 houses and it's like the same house you're showing them all over again? And they're like, well, no, I didn't know I could tell them that. Like, of course you could. Like, you are the expert. You're the professional.
Yeah.
You have to guide them along. So like, no, that's 100% correct.
Agents need to be decently bold. Decently bold is one of the things that I'm known for saying. They need to learn how to be decently bold and know what they're truly allowed to say, because our time is worth money. And what we do is not just about money, but come on. Like, you need to be smart with your time. I was talking to a very seasoned agent yesterday that was telling me, yeah, I just gave up commissions on 2 deals, blah, 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 because I only have 12 closings this year. And that's like half of what I have on a bad year. And I'm freaking out. And I'm like, well, they can smell that a mile away. It's called commission breath. Yeah. Stop it.
Yeah. Taking a discount like that. No, I mean, it doesn't fly right now. So I agree. I think, agents that are serious about this, they either have to hit the ground running and then devote all their time into one thing, or, hire somebody to teach them and show them the way, because it's a massive shortcut. Like, even just for us, you know what I mean? Like, we did very well in the beginning of our careers. If we had hired a coach, I'm sure we would have gotten, to where we are much faster. Like, that was one thing where I kind of regret.
I am where I am because I had a coach.
Oh, you did from the beginning?
I hired him before I even hired Mariah. I had a coach, and he helped me hone in. Like, I was accountable. Like, we would set my goals, and I met with him weekly, and I was accountable to him for my goals. And if I wasn't doing something, he would call me out on it. Like, hey, this is what you said you wanted to do. When are we going to get it done?
Yeah.
But not only that, he helped me. Like, he was my sounding board more than anything. Like, I have all of these big ideas and all these things that I want to do. Everybody else, I said, hey, I want to write a book. And they're like, yeah, okay, whatever. Because 1% of the population actually writes a book and publishes it. So everybody says they want to write a book, but nobody writes a book. Right. And I'm like, no, like, I really want to do this. Well, he had already done it. So I had put everything down, and he's like, okay, let's look at it. And then he read every chapter that I wrote. Like, he was with me through that process. He put me with one of my publishers, and it was somebody that he used. So, like, I had somebody that was like, okay, this is what you want to achieve. Now you set the goals. I'm going to hold you accountable to the goals. And then I could go to him and say, I had this idea. How do I turn this idea into reality?
Execution. Yes.
Right.
Oh,
And so
I like
he would
that.
help me
Yeah.
process, because you're also a big ideas person. You have to have somebody that is your sounding board, that you can say, okay, this is my idea. What do you think? And then they can say, okay, are you sure you want to take that on right now? Or do we need to put that down for 2 years? Like, we need to get finished with XYZ first. That's what my coach did for me.
So you do recommend, if somebody's struggling right now, do it. Just take the leap. You know what I mean? Get a coach. Because also too, I was like thinking about this, when you go to college, how much are you spending every year in college? What minimum, like 15 grand a year, like minimum, maybe probably more, but 15 grand a year for college. You know what I mean? Like what's a few $1,000s for a coach that's going to actually teach you how to make money, not just like a general curriculum where it's the same for everybody. Like, this is a customized one-on-one thing, or, potentially group thing, where they're going to customize and show you exactly for your situation how to make money, how to execute, how to plan, how to take all the steps necessary and hold you accountable to actually doing it. So I 100% agree. So I want to end this right now with one niche, because obviously I do rentals and you do open houses. That's what you specialize in. So what we just talked about over the past 45 minutes or so about having the market potentially crashing, what is, if you want to give advice to a new agent, obviously picking a niche, what is the niche that you think they should get into now, with this being said, that the market's gonna potentially be crashing soon? What niche do you think they should go for right now?
Well, I think the biggest thing, open houses work really, really well because we have buyers and sellers that are walking into open houses and we're finding them that way. I know that people that are paying for leads and all of that, they're really, really struggling right now because the leads coming in are just not quality leads. Meeting people face to face, networking with other professionals is a great niche for getting out there and building referral based relationships with other professionals where, hey, if I have somebody that wants to change their whole stock portfolio, I'm going to send them to you. If you have anybody that needs to liquidate their portfolio of real estate, you send them to me. And really building that network, I think, is going to be key right now because everybody knows somebody who's going through something or needs real estate.
Yeah, I always say, there's three things, for lead generation. It's always three things. It's one is your niche that you choose, which you just
Mhm.
suggested open houses. I would suggest doing rentals or open houses, honestly.
Mhm.
And then networking is like a mandatory given. Like you have to just
Mhm.
always be networking, and
Yep.
your sphere of influence, like
Yeah.
your
Yeah.
sphere of all the people that like those three
Right.
things, you know what I mean? That's what you always have to be focusing on no matter what.
But
And I agree, the
niches
open houses work. Oh,
niches
what were you
can
saying?
be like some people want to pay for leads. Okay, fine. But watch your lead spend right now. Okay.
Yeah.
Some people would rather do open houses. Some people will do a combination. Some people's niche is they want to call for sale by owners. Okay, great. You know what? For sale by owners are really going to be struggling right now with selling their homes when there's tons of other homes in the neighborhood on the market. So
Ooh,
they're
that could be a
great for
good
you to
one.
talk to. Okay.
That could be a good one.
Um,
Yeah.
in maneuvering in a distressed market, we actually door knock on the distressed homeowners' homes to help them with their options.
Oh.
So it's a
And
whole different format for door knocking, which is very direct to the people that need us. And I teach
so
that
we're
strategy as well.
so we're thinking open houses, we're thinking door knocking, we're thinking for sale by owner. You're saying to avoid the paying for
Mhm.
ads like on Zillow Premier or something like that. And then obviously rentals, if nobody's going to be buying or selling, people are going to be renting
Right.
properties. So, my rental strategy is also an amazing opportunity to
Yes.
start getting out there and then building future buyers. Obviously, you can get your half a month's rent commission right
Yes.
now, which is for me $2,000. But then obviously you will get your future buyers when the market flips again, and it will in a couple years. The market's going to flip over. So
Yes.
if you work with all these renters now, guess who's going to reach out to you in a year, 2, 3 years from now that wants to buy from you? Well, it's going to be your renter. So I think, yes, I
Right.
agree. I 100% agree. And what I always suggest then, because I thought your suggestions were amazing, pick one of them, like try them out,
Mhm.
like try doing my rental strategy with the Broker Advertiser, getting permission,
And you try it
try
for at
doing the
least
open
three to
house
six
strategy.
months.
Yes,
You
yes.
you
Try
you
them
give it
out. Like,
time.
try them out. Yeah. Don't do the
Yeah.
ones that you don't think are going to work. Like we just said, that probably not going to work doing, paying for leads like that. Like probably not the best idea coming up to a crashing market right now. But like try the handful that we just suggested: the rentals, the open houses, the door knocking, the FISBOs, like expireds. Like try all of those out. Give it at least. And I always like to say at least, like you said, probably a couple months, right? A few months.
Mhm.
Give it at least a few months. Hit the ground running, devote all your time and energy into those one niches. And then if you like it and it's working for you, stick with it. Maybe if it's not working, you think you could be doing better, try another one, and then see
Right.
if that works even better. So I 100% agree, because there's
Yeah.
not just like one size fits all. It's not just one answer, like do this and you're going to make a shit ton of money. Maybe you don't like doing that. Maybe you like doing something else better. Maybe you would prefer going and knocking on people's doors as opposed to posting any broker advertised listings. Like maybe you would prefer picking up the phone calls and doing the cold calls for FISBOs. Like maybe you would prefer holding open houses and putting up the signs and the honey look boards and doing all that good stuff. Like you have to try it out and see what you like, and
I don't
then
recommend honey
pick
look
that.
boards.
You don't recommend those?
No,
You think those are bad?
it's distracting and takes away from building the relationship.
Oh, okay. Okay. All
And
right.
it's
So no honey look boards then. Yeah, she's the expert on open houses. So don't do honey look boards at all. Just show up then, put a bunch of signs out, put 20 or 30 signs around the block and
yes,
everything so people know where they're going, and be personable, and bring your cookies and your waters and everything. And right, you could do that still, right?
you can do that.
Okay,
Yeah.
good, good. Well, Tina, thank you so much for coming on today. I learned a lot. I hope everybody listening learned a lot. Where can everybody find you?
You can email me, tina@tinavaliant.com. You can find me on Facebook. Literally, I'm the only Tina Valiant. Like, you can search me, you will find me. You can find me on YouTube. But really, shoot me over an email if you want more information about group coaching. My group coaching is going phenomenal. I'm very proud of those guys right now, and they're from all different states, so that's super cool too. And then if you're interested in individual coaching, or possibly you want to build a team, or possibly you have a brokerage and it's a boutique brokerage and you're struggling a little bit, feel free to reach out to me. I will respond to you. Don't be surprised that you get a response.
Yeah, Tina's very good at responding to people. And yeah, definitely, guys, if you need any kind of coaching whatsoever, she really focuses on open houses, among a lot of other things that she was talking about. If you want rental coaching, where I do my rental system, reach out to me, andy.coleman1186@gmail.com. I'm going to drop it in the description. Thank you guys so much for watching. I really hoped that you liked the podcast that we just did today. Hit the like button, drop a comment below, subscribe to my channel, and I'll catch everybody in the next one. All right. That was pretty good. Bye, everybody.
Bye, everybody.